Good day, everybody. Still here for the Daily Market Pulse for Friday. It's December 6th, 2013. Good numbers came out economically. We had talked about this throughout the week that things were sort of heading toward at some point to be a move in the markets, and that likely things were heading in terms of be Thursday going into probably Friday, where the biggest resolution would occur. Whether they would bake it in before or at, and they certainly waited right up until that moment. They started early, but then eventually the real move occurred Friday today. Everything up, however, in lower volume. We did lose a couple of distribution days. Nasdaq dropped from 6 to 4, and S&P from 8 to 6. So um, that's decent. The numbers are still kind of on the high side. The markets are still up there quite a bit. The Nasdaq in particular. That's when you got to watch out for the most and maybe the closest. Dow Jones, S&P, Nasdaq now above the moving average. The TSX still remains below. So let's take a look at the charts. Okay, so you can see we had the 5-day decline. It came right into 15.8, and then just a huge bounce. So now on Wednesday there was a little bit of an attempt in reversal. You see the lows on that lower shadow. Now yesterday on Thursday we did not make a new low, so that was reasonable in terms of a suspicious attempt for maybe a bounce from there. We knew that after multiple days we'd see at least a somewhat of a bounce, and things were oversold, as you can see the stochastics at the bottom of your screen. So it came into the 15,800 level, bounce came through the 20, came through the 8 moving average as well, and finished sizably higher. So it's still off its highs ultimately in the 16,000 plus region, but still solid green candle. In a bull market, we don't necessarily have to have higher volume, although it would have been nice, especially on a day like today, to see the higher volume. That would have been a lot more convincing. That blue shaded area was the area we had anticipated would be the support area on the way down, and yesterday, except for yesterday, it did close below that, but all the other days held within for the most part on the way down after the initial sell-off at the top at near 16.1 to 16.2. Okay, so with that, let's go to the S&P. S&P, you can see, has actually came off the 20-day moving average in the last 3 days, well, Wednesday and then going into Thursday, including now Friday. All three lows were higher and higher, coming through the 20, coming through the 8 as well, near the highs as well in this case. So the highs were established back on the 29th of November. It was 1813.55, and you can see the high today was 1806. So not far off the high. So the S&P doing really well. That gold line was a dark cloud cover high. That's the area that it's currently testing. The Bollinger Bands are still not opening. So maybe with this move we'll start to see it opening, which would allow it, giving it some more room to go higher if that's the case. So you still got to get through the highs from the November date to truly remain and continue this bullish run. Let's look at the NASDAQ. The Nasdaq came in after the bearish engulfing doji and then a kind of a spinning top formation on Wednesday. Just held right at the 8 moving average. Although it did come through and fill the window originally, it went sideways for these last 3 days, Tuesday, Wednesday, Thursday, giving an idea that a refresh was coming. You never quite know the direction, although there had to be a bias based on the selling that occurred in the S&P and Dow that we saw earlier. The bias would have to be on the long side just because the trends are to the upside. So we're still at the highs of the bearish engulfing. Nothing's established. We got a huge gap higher, a fade, and then a rebound later in the day. The high established still is 40.6849. Today, 40.6986. It did make a new high today, but didn't finish off its high just a little bit. But that's a pretty strong move. Gap higher and holding. Although one could argue that that's a hanging man now, and a potential resistance, which can give you a little bit of a bearish sense there as well. Red real body, kind of a hanging man like look to it. So probably a little bit of a caution still that needs to be warranted here. Still looking for a push higher, of course, at some point, but still exercise a little bit of caution nonetheless. And let's look at the TSX. As I mentioned before, it had been lagging. It's below the 8 moving average still. You see the drop following the multiple levels of resistance across 13,500, shooting star, bearish engulfings, plus all those upper shadows that were showing signs of rejection. We did finally get a sell-off and a retest of 13.5 from the downside up before the failure to the downside where it went to the 50-day moving average. It held essentially the hammer low. It held the 50 yesterday, rebounded reasonably today, but still below a support area, which was, a resistance area, which was support right at 13,300. So, and below a declining 8 moving average still. So it's kind of wedged here. I think somewhat undecided. I'd like to believe that it can bounce up and through back toward 13,400 again, but right now all it looks like is a test of 13,300 right now. All right, let's look at the U.S. dollar, Canadian dollar. So we talked about at some point that after the push through 106, that at some point you'd have to expect a pullback, multiple green candles, a breakout. You usually would think a retest or a test, I should say, of the breakout area. Although it tested a little bit on its breakout, in late November, early December area, but late November. Now there's a pullback, dark cloud cover as of Thursday, a little bit of a push down again today. 107 has been tested almost 3 times now with a decline into the 8 moving average. Percentage-wise, from the standpoint of retracement, I would probably take it right in here. You're looking at a 618 retracement most likely at 106, which would make sense where the breakout is. That would be a logical place for a retest. So it's got a little more downside you'd expect here. Certainly in this case, the treasuries were up at one point and then dropped. You can see the level of indecision that occurred here. Large upper shadow with a new high, but a large lower shadow as well. So right at a goal line, right at that 130 mark, right where we thought there might be at least something going on here. Former support area from just days prior. It held at. It looks reasonable that it could bounce higher from here. Still, I like it on the long side, right at the moment anyway. And gold actually sold off. Oddly, the dollar was down, at least relative to the Canadian dollar. And we did see gold essentially finish lower than it did yesterday, although it's a green candle, very undecided spinning top, high wave of sorts with a large upper shadow, lower shadow as well, but it did finish lower. It went much lower, retested 110 before bouncing once again, forming a green candle at least. So still holding these levels for the time being, looking for a push up and through 1250. If it can ever accomplish that, and then it goes long from there, even stronger. But right now, holding support for the time being. Let's look at the futures on the crude. And crude managed a new high today with a higher low as well, and finished up as well. So it's just really pushing and testing the 50-day moving average right now, with maybe a little bit of room still to 99, and it could still want to accomplish and take a swipe at that. It's still very, very bullish, but at this point, you got to believe there's going to be a little bit of a pause sideways to down, just as a retracement of sorts, just as a pause. You can see the spinning top, the kind of doji like yesterday, and then another spinning top today. Getting a little fatigued, a little undecided in terms of what it's going to do next. I don't think those are real resets intraday yet. I still like it up overall on the long side. I still like it higher, but what it does here in the next few days, after being 3 consecutive closes above the upper Bollinger Band into a declining 50-day moving average, I would believe it stays below 99 and then eventually takes another swipe at and attempt to break through 99 next week. Let's look at, we can look at the natural gas. So natural gas had come through the 395 area and then just kind of hovered there for a couple of days, hot on me and held, and so far that was support. If it was going to drop down, I said it might drop down percentage-wise, maybe to the 8 moving average, but it literally held 395 in the polarity area. That goal line was established, you can see, based on that recent high that occurred on that huge, very aggressive and bullish gap higher before it faded lower. So now a huge day yesterday after inventories. And then again higher today, new high today. So again, this might be where it takes a pause, but still very bullish overall in terms of its appearance. And we might want to look at copper, since it does have an effect and impact, or at least it gives you a portrayal anyway of the economy. So there's your decline, there's your test. It went below, reversed aggressively, it came through an immediate buy signal here. It came back to retest this area with a huge bullish engulfing on Wednesday. sideways yesterday, then another good bounce today. This is all looking very, very strong and bullish. Yes, it's into the 50, but I like this appearance here in terms of its bullish move. Holding support across 314 to 315, and then pushing and driving toward 330 to 332. Let's look at small caps, risk on. This will be very, very important to look at here. And risk on, you can see the trend that's been higher to this point. Let me fix my candles. Okay, there's a quick adjustment there, so they're a little more readable. So we had the resistance with the bearish engulfing, came back, another bearish engulfing, finally broke out, came back, retested, held. I like these spinning tops here when it's holding support, and then today a rising window. So I like this as well. Even though it's a spinning top, the rising window is telling me the strength is there. You're looking for 114 once again, most likely as a target, and then possibly higher. So right now this looks reasonable as well for the time being. Transports, let's look at that. Transports had broken and then come back to test the former resistance, now support, including a rising 20, went even higher, made a new high, hit the 1272 extension essentially with a shooting star, came back, faded, retested support once again. Doji, if you will, doji spinning top, and then another gap higher like we saw in small caps here just a moment ago, closing above the 8-moving average. I like this still, even though it's a gap higher in a red candle, I still like this to try to retest 130 to 131. Let's look at retail. Literally sideways here for multiple weeks, going sideways between the 60 mark as well as the 6150 area. So up and down, holding 60 for sure. It did close 2 consecutive days, Wednesday, Thursday, below the 20-day moving average for the first time in a very long time. Today rebounded into the 20, into the 8-moving average as well at 60.50, but not really that aggressive. It did gap higher on somewhat of a separating line, if you will, from the lower close yesterday with a higher open and higher close as well today. Bullish in nature, certainly, but still having a struggle to get through the 8, but also it needs to get through that falling window that occurred on Tuesday. All right, let's look at SMH, the semiconductors. So we've looked at semiconductors for a while. It was going sideways with a drive upward. You see the thick blue line I've got diagonally coming up higher. This one right here, this was essentially a series of lows going up, almost like an ascending triangle, which gives you the notion, or at least the inclination, that the bulls are present and there's a drive to push things higher. Doesn't always work out that way, but that at least is the idea and the notion and the thesis and theory. And there it got pushed through, as you can see. Today it gapped higher, a rising window. It did form a spinning top above the Bollinger Band, but at least the bands are opening. It's a bullish move. It's a breakout. It may come back and retest the window and the breakout area, the change of polarity, but still it's bullish in nature. And the VIX, well, we talked about this as well even a couple days ago, having closed 3 consecutive days above the Bollinger Band as of Wednesday night. It did so again Thursday night, so 4 consecutive, that at some point you see a reversion to the mean, and that would mean it dropping lower. And so everything seemed to be setting up and timing with the VIX to drop and the markets to pop. And that's pretty much what happened. The question is what happens next. Now with a falling window, you'd expect a continuation of the downside, at least maybe to the 20, possibly all the way back down to 1250 again. So we'll see if that's the case. If that is, then likely then the markets go higher and at least retest the highs, if not break the highs, depending on which index you're looking at. Okay, that concludes, at least for now, the daily market pulse. And then maybe before I fully conclude, I'm going to show you this chart right here, and I guess we can probably do something like this here. We'll do that, and this is you can see the huge move here from below and where it is now. This is a monthly chart of the Fed Fund futures, 30-year Fed Fund futures on a monthly chart. And the reason I'm showing this is because this is kind of helping you with respect to inflation. So the assumption, of course, is that the Fed will not start to taper off necessarily until we see signs of inflation. The only way to see signs of inflation, when you look at this particular chart, is when you see it dropping. When it starts to drop, you know inflation is starting to increase. Right now, we're not seeing this as showing any signs of dropping yet. Although it's been going sideways, it seems like multiple months of just sideways and almost like doji, spinning top-like formations at some point, and overbought as well. At some point, this is going to start rolling. That's why there's, everyone seems to be thinking at some point that there's going to be a tapering, and there will be. But right now, we're still not seeing any signs of inflation. People keep talking about the jobs, et cetera, et cetera. And yes, that's the case as well. That seems to be improving. But really, until we see signs of inflation, chances are the Feds are going to continue with the bond buying. And right now, this chart is telling you not happening yet. So until we start seeing a drop, then we know at some point they will stop with the Fed buying of bonds. Okay. All right. With that concludes Friday, December 6, 2013, as well as another week in the markets. Talk to you next week.